Hey guys, how's it going? Value Venture Investing here today. So today was the big day. Apple released its earnings Q1 2019. Now we're looking at the stock here. It's up pretty, fairly significantly after hours. I think this could be some pretty good news. Obviously, investors aren't as bearish on these results as I thought that they might be. So let's do a quick overview of actually what Apple reported. A lot of this isn't that surprising. It's kind of right in line with what Apple said, but there is some aspects of this that have been kind of what I've been telling you guys all along, why I believe Apple's really strong. So EPS, I said this one first here because this is something that quite often people are very concerned with. The estimate was $4.17 per share, and Apple actually slightly beat that at $4.18 per share. We've seen this come up year after year after year. Now, some of the reasons for this, of course, are that they're buying back significant amounts of shares, they're upping their prices, and a lot of people have actually, took the upping the price as a negative because that's how they're maintaining these gross margins. So a lot of that is true, but they're also doing a lot of the good things like buying back shares and stuff like that. Revenue, the top line, we were seeing $83.97 billion was the estimate. And actually, Apple slightly built that, 84.3. So when Apple came in, what was this, about a month ago, and Tim Cook revised the earnings for the outlook earnings for this quarter, he said about 84. So he's about right on line. We're at $84.3 billion. So not too much of a surprise there. Now, this is where things get a little bit more interesting. This is where we really see Apple's strength. Services is the big one, of course, right? Services are now almost $11 billion, guys. $10.9 billion. Again, up 19% year over year. And I feel like the last couple of times I've done this video, I've said this to you guys, like every quarter, year over year, the growth in services is phenomenal. And even if we're seeing iPhone units, slow down or potentially even drop off, this is where they're deriving a lot of the revenue now. Surprisingly, Mac was up 9%. Right, we've seen the refresh with the Macs and the iPad up 17%. I called that one 17%. I mean, this was something that was actually a negative thing for Apple for quite some time, as they said, iPads are dying, the growth is dying. But the last video I made, I told you guys how bullish I was on the new iPods, how amazing they are. They're just beasts. They're amazing, right? And we've seen that up 17%. And so that even surprised me that was up 17%. But they did well there. And again, the biggest one other than services for me is wearables, and others comes in there as well as like accessories. And this is up 33% year over year. And this is what I said. This is going to be huge for Apple. This could almost potentially be like the next. In my mind, I know that they're shooting for services, but in my mind, it could be the second biggest product category that we see. When we see these watches, we see what they're capable of. You see what Apple's doing behind the scenes with health and all this stuff. It's just starting. It's just getting in its infancy, and the numbers are already amazing, and I'll show you that in a little bit when we look through their actual financials. But this is where the potential is. So even if we see the iPhone units drop off, I'm still very bearish on a company that has a low multiple at like 12 times earnings or something like that, that has just these two, not to mention these. And cash was down to $130 billion. I wrote it out like that for you guys, just to see how huge that number still is. And again, Apple's going to be net cash neutral by, I think it's 2020. And I keep stressing how big I think that is. Like, why are they doing that? What's the reason? That shows you how fast they're going to be investing, how fast they're going to be returning dividends, buying back shares, and potentially buying other companies, and also coming out with new products and services, and especially new, services like the streaming one. Tim Cook spoke in an interview about how he almost explicitly stated that they were going to come out with a streaming service to kind of rival Netflix. So we'll see how that goes. So let's take a look at the actual financial statements right now. So looking at the top here, we can see this. This is for 3 months ended. This is year over year, right? So this is over the holiday quarters. And there we see it right there. The products are down from $79 billion to $73 million. So this is where we're seeing the total net sales of $84.3 billion versus $88.293 last year. So that represents the 5% decline that we saw happen there. Again, services over $4 billion in that quarter, right? And that's 3.8 versus 3.8 last quarter. One thing I like to look at as well is research and development. Even though we've seen, this not be the strongest quarter, they're still upping that research and development. $3.9 billion in 3 months. That's a massive amount of R&D. And it even blows the year over year quarter out of the water at 3.4. So, I mean, that's something that I'm always looking at as well to show that they're still really pushing. And then again, here we saw the EPS as $4.18 versus 3.89 a year ago. Not the best news here when we look at the net sales by the reportable segment. We're not getting numbers from Apple anymore, but it appears that every geographic segment is down. The big one being Greater China here. It's almost $18 billion last year, and now we're at $13.169 billion. So that's the drop there, and then that's where we get the total net sales at the bottom of $84.3 billion. Again, looking a little bit closer here, net sales by category, this is where we can see that they faltered. $61 billion a year ago, and now we're at $51 billion. That's a huge drop there, and that's the weakness that we've been seeing in China. This is with the trade wars, potentially something else, China slowing down. So that's been a big concern. If you haven't watched any of my other videos, that's the big concern that we're looking at here. The Mac we see here, again, showing strength over $7.4 billion. The iPad is now at $6.7 billion. That's a significant gain. And wearables, home, and accessories is now over $7.3 billion. Look at last year, it was $5.4 billion. That's a huge jump. And now we're looking down at services. Again, I'm always driving this one home to you guys. We're at $10.875 billion. So overall, I think this was a pretty good quarter. I mean, we were all expecting this. So if you're wondering why the stock is up so much, I think because this is all baked in, right? Like I said, the estimate was 83.97. They beat it. They beat on everything compared to what the actual analyst estimates were, and they were pretty bearish. So it's kind of like everything was in line. There's no bad surprises, and maybe Apple's finally getting a little bit of credit for this stuff. I see them really pushing into, like I said, the services and wearables, but I don't see anytime soon them getting any any thumbs up for it in the markets. Wall Street like it, give them a higher multiple. I don't see it happening because this is pretty obvious what's going on, the underlying strength here, and it just doesn't seem to be discounted into the price too much. So still at this price, Apple would still be a buyer, but it's going to take a while, like I said in my last video, for this to all play out and see what happens in the future. So overall, I thought it was a pretty good quarter. I wanted to make a quick video for you guys tonight, just giving you the information as quick as possible rather than reading through it all yourself. And I hope that you guys are doing good. And that's going to be it for today, guys, and I'll see you in the next one.